Time to check in on our ag commodity trade, and we are going to take a look first of all at our corn market in Chicago right now. As I mentioned earlier in the broadcast, we started out a little firmer on the day and then sold off, and now we're kind of stuck in the middle. We have the December corn now unchanged and now a 1/4 cent lower at 3.66, so about as flat as it gets. March unchanged at 3.78 1/4. And if we look at the soybean market right now, you have your November contract currently just a 1/2 cent higher at 8.39 3/4. Whoa, what happened there? It had been about 7 cents higher earlier this morning. Now it's 3/4 higher at 8.40. Let's find out what's going on. Let's go to the trading floor in Chicago and talk with Scott Gecas of Longleaf Trading. He's there at the edge of the CME Group. What happened to the soybeans all of a sudden, Scott?
Yeah, I think the soybeans, with the big rains coming in with the next few days, I think that's putting a little bit of pressure on the soybean market. The only positive spin that I can find or that I'm thinking about with the soybean market in particular is just everything that's going on in Argentina. They had a strike earlier this week, a 24-hour strike. They're implementing export tax on beans coming out of Argentina. Other than that, everything is shaping up for a very bearish market. We have record supplies. If anything positive comes out of NAFTA, I think we could get a little pop, or if anything gets resolved with China, I think we could get a little pop too. But other than that, just fundamentally, technically, I think we're set up for a little bit of a move to the downside.
Well, this morning we had the export sales numbers that came out from USDA, pretty strong on the corn, over 1 million tons once again. Soybeans, they were at 673,000 tons this time around. Nothing stellar, but I guess that's kind of normal for this time of year. The wheat at 379,800 tons. What was your takeaway from the report?
It just, those numbers that came in line, there wasn't really any big surprises. They pretty much came within the expected ranges. So unless if you get something outside of those expected ranges, you're not going to see any type of big movement one way or the other.
Okay, now let's take a look at our wheat market. And in Chicago wheat, we currently have that December contract trading at 5.09 3/4. It is still down 4 cents on the day. We have the Kansas City market on that December contract now trading at 5.13 1/2. It's down 3 1/4 cents per bushel. Meanwhile, Minneapolis spring wheat trade, we have the December contract down 2 1/4 at 5.69 1/2. So what's your reading on the wheat market here? I mentioned earlier in the broadcast, it seems like it's kind of grasping at straws to find some level of support out there. We're looking at new crop planting conditions that are going to be fairly optimal, I guess, when you have really good soil moisture this time around.
Yeah, with the wheat market in particular, especially in the States, you're getting a lot of pressure on it just due to everything that's coming out of Russia. You know, they came out and they explained that they are not going to put an export tax on everything that's coming out of Russia. They're ramping up production, ramping up exports. They're at record levels. So unless if that changes, that's going to put a lot of pressure on the wheat market. Expect that export tax to be revisited later on in the year. We'll see how that really is going to play out, though.
The cotton market is a different story today. It opened up under pressure, and then it roared ahead with triple-digit gains. Now it's settled down. We're 68 higher on December at 81.98 cents per pound. We'll come back and talk more with Scott Gecas about our livestock trade when we return after these messages. Come on back. And we're back to our discussion with Scott Gecas. He's with Longleaf Trading in Chicago. And we're going to turn our focus over to the livestock trade today and see if there's anything that's moving the market one way or another. We had a soft open on the cattle market, then it firmed up at mid-session. Scott, have you heard anything on your end about any cash cattle movement yet this week?
Not really too much. We've seen some cash cattle trade around 108. That is a little bit of a discount to the futures right now, so that is putting a little bit of pressure on. That's the reason for the weakness. Cattle in general is running into short-term supply concerns. That is being offset by the July exports. The July exports came in at 279 million pounds. That was versus last year around this time about 239. So that is showing a little bit stronger demand, offsetting those short-term supply concerns.
Looks like asking prices on the cash cattle trade are around 110 or 111 or so per hundredweight this morning. And looks like the bids are only about 105, so they have a little bit of negotiating to do to come together there. Let's take a look at our current futures trade. We'll start with live cattle here. The October contract is 97 higher at 109.87. And you have December live cattle 77 higher at 114.50. It looks like it's front loaded, Scott, with the nearby contracts showing the biggest gains. The deferred's not as much, but they are all higher across the board. If you look at the feeder cattle trade right now, we'll start with September, and it's trading 97 higher at 152.75. The October up $1.03 now at 152.55. So that would be over $1.50 off of our early morning low this morning. November up 95 cents. So kind of a consistent rally all across the cattle complex. But if you look at the lean hogs, they had something to build on this morning when they closed $3 higher on October yesterday. They came out of the gate this morning and promptly sold off. I mean, they're just not getting any traction at all once they got into the expanded limit territory there. So October lean hogs are down 60 at 54.38 right now. In December, down 43 at 56.25. Is there something, related to that African swine fever outbreak that maybe is pushing the market down today instead of supporting it?
Yeah, I don't see anything coming out in the lean hog complex that is warranting any type of sell-off. Going into the weekend, I think it's profit-taking just from going up, limit up yesterday. But the swine flu, it's spreading, it's being underestimated, in my opinion. We have 13 cases. You're seeing that swine flu hit farms in China from 1,100 miles apart. It's spreading. WH Group, they shut down a slaughter plant in China. Now, there's expectations that the swine flu could hit about 16% of China's herd. If that happens, that is the amount of total pork production last year globally. So that's a very significant factor. We're seeing U.S. exporters ramping up, going for a major export campaign. We're going to see how this is really going to play out. But if that swine flu continues, it's a major problem in the pork industry just across the board. We're going to stay extremely bullish above 55.
Wow, that is going to be one factor to really keep a close eye on. All right, so it could be profit-taking heading into the weekend from your perspective there. Scott, thanks for talking with us. Good to visit with you. Hope you have a great weekend.
You too. Thank you.
Thank you, Scott. Scott Gecas is with Longleaf Trading in Chicago.